And now you have a very important decision here to make of whether or not you want to open a margin account or a cash account. So let's go ahead and explain the difference now. Now, just to keep things simple, for 99% of people, they're going to want a cash account. A margin account is going to allow you to borrow money from your broker, just like a personal loan, although instead of using that loan to go out there and pay for expenses or maybe buy some crap, instead you'd be receiving that loan to buy financial assets like stocks, ETFs, etc. Margin investing is extremely risky because right there even it mentions that gains and losses may be amplified. So it might seem tempting to borrow money to double down on a particular investment, but what a lot of people don't realize is although the upside potential is doubled, well, the downside potential is also doubled. But if you did want to look into margin trading yourself, you could select a margin account. And even right here, it mentions that Webull offers up to 4 times leverage. That's pretty scary because that could be a 4-fold loss on whatever you're experiencing by leveraging up like that. Although you might be interested in opening up a margin account because of some of the PDT or pattern day trader rules. So with a margin account, you do have unlimited day trades when the net account value is above 25,000. So that is something that you may run into with Webull or other trading apps, is restrictions on how many trades you can place in a given trading week. Otherwise, you can get flagged as a PDT or pattern day trader. Now, if you're using apps like this for long-term investing and dollar cost averaging, you probably don't need to worry. But if you're trying to trade in and out of stocks in the same day or in the same week frequently, then you might want to look into a margin account just to get around the PDT pattern day trader rules. And for accounts under 25,000, no more than 3 day trades in 5 consecutive business days are allowed. And that means that you can't be trading in and out of the same stocks in the same day or even in the same trading week if those trades haven't settled. We're going to talk about trade settlement later on as well when we look at withdrawing money from Webull, but these are some important things to be aware of. So for this tutorial, we're going to choose a cash account. There is no deposit requirement. You can execute unlimited day trades with settled funds, but there is a settlement period here, which is typically 2 business days to complete. And you can receive GFV, good faith violation penalties for selling stocks or options with unsettled funds. What you're going to find with Webull and a lot of other trading apps is they're going to offer you a good faith loan essentially for free when you have funds in your account that are not settled. They're going to let you invest it anyway, whether it's a new deposit coming in or proceeds from a prior stock sale. But you need to make sure you're not then selling those stocks before the funds settle. Otherwise, that's called a free ride, and it's something that the SEC takes very seriously, or maybe it's FINRA, one of the big organizations. But either way, it's not just Webull trying to yank your chain here. These are regulations that they themselves have to follow. So you should just be aware of the restrictions there on settled funds. That all looks good for now. So we're going to click on the blue next button to open a cash account.